And there you have it. The markets are officially closed on this Friday, October 11th. Welcome, investors and traders. I'm AJ Monte, and boy, did we have an action-packed week this week. In fact, I think I lost a little bit of my hearing from the National Weather Service's alerts that have gone out over hurricane warnings, flood warnings, tornado warnings, you name it, we got it. And I'll get to that towards the end. But first, let me get to the markets. And just to give you a heads up, I will be talking politics and how that might affect the markets moving forward. And I'll save that to the very end. The reason I'm doing that is because after this report, we only have 3 weekly market reports before Election Day. So I want to make sure everyone is informed about what I'm seeing in the markets and on the political front. So here we are with DIA. We went to a higher high, no doubt about that, with higher volume. Look down below and you'll see while we're setting higher highs here, we're still setting lower highs on the stochastic. And that is exactly what we had back here. Higher price highs, lower stochastic highs. And so as we read that, that is known as a negative divergence. I bring that up quite often because I teach through repetition and I want everyone to know what the signals look like. First, for those of you who are joining me for the first time here, I've been trading for over 42 years and my percentage of accuracy for establishing price targets and target hit rates is unmatched by anyone in the world. So I'm very confident in what I'm seeing in the charts because while I might have political opinions, I'm basically allowing the charts to take over with regard to the forecast. And many times I'll analyze a stock I might have an opinion about and the technicals are telling me completely opposite of what my opinion is telling me. And when I'm in positions like that, I tend to stay away from those stocks or I'll move on to another stock that's more in line with the technical signals. Now, DIA does have a higher price high today, like I said, on higher volume. Now, because of that negative divergence and the overbought conditions on the CCI especially, I am keeping that downside target down there. And if you look back in the past here, these diagonal lines that I have in red are past forecasts. And a lot of times I'll do 2-part forecasts, which no one else will do. You can see here I had a downside target, which hit. Then later on, I had an upside target. And when I established that price target in a 2-part fashion like that, you have to understand that none of this price action from here on was even on the board. And so that's exactly what I do. I put the price targets out there in the future and I let the charts do the rest of the work. Back here, again, you could see upside target, downside target. It took a while, but that downside target hit, and then what happened? It reversed after that. Here's another 2-part forecast that's still in place. We obviously hit the upside target. I'm waiting for that downside target to hit. So we'll see what happens there, but I feel very good about those targets hitting because of the percentages. Now, another thing that I run into all the time is with regard to the accuracy is, how accurate are these charts? Well, it depends on who's reading them, of course, but there are certain signals that show up that are extremely high probability signals, like what we see here in the form of a bearish engulfing candle, which is 80% bearish, and it's very reliable. Here is a hammer candle, which is a bullish candle that results in higher prices 80% of the time. You got that 80-20 rule running throughout these charts. So it's not a right versus wrong. It's a percentage play, right? It's like you go to Vegas. If you're going to make money in Vegas, and there are a lot of professional gamblers who actually trade the markets as well, they will tell you that it's never, I'm going to be right all the time or wrong all the time. It's based on the odds and the probability that they're going to make money. And a lot of times they go with the high probability bets that pay out less, but they're more consistent. And that's exactly what we do here. Our members are trading in and out of the markets. My audience is made up of swing traders, not long-term investors. So if you're a long-term investor saying, oh man, this market isn't going to crash, I'm going to keep going as a bull, that's okay. That's your opinion. But that's not how swing traders work. Swing traders get in, they trade the up legs, they trade the down legs, and they make money. And most of our members are option traders at various levels. There's a lot of newbies that come in at the novice level. They're learning right along with the intermediate traders. And then we also have advanced traders that come along and are making money just like everyone else. So again, I'm keeping that downside target, and one of the main reasons, and I'll do this again on almost every one of these major market ETFs, is I look at the monthly chart. And you can see here, we have this long stretch of green. We have 6 green months in a row. The last time we had 5 green months in a row before the pullback. And you have to also understand that this market cannot keep going up at the level and the rate that it's going, because now it gets extremely dangerous. Corrections and even bear markets are extremely healthy for the long-term aspects of investing and trading, because if it gets too high, then the money dries up and people just sit on their hands and they wait, because they know eventually a correction or a bear market's going to come in place and they want to be ready for that. So that is the monthly chart on DAA, and that's not even the most extreme. We'll get to that when we look at the Qs. Now, looking at the IWM, which is the small cap stocks, you can see we came very close to hitting that downside target yesterday. We did pivot higher, but look, it's on lower volume. Right? That's not a big mover. Yeah, it's significant in the size of the candle and the fact that it closed over that moving average, but you're going to have a lot of resistance up here, where each time we got up to these levels, we had selling activity coming in, and I think we're going to see the same thing happen most likely next week and the week after. All right, so that downside target's still in place for IWM right there. There's an open gap as well at 212.78. Looking at the Qs, which is the tech sector, very interesting. We had much lower volume. This is the contrarian to the bunch, where we're already at a resistance point right here. You see that? And that's also a gap fill resistance level. So this is significant resistance that the tech sector is going to have to overcome. And as a result, you can see we have a long stretch of green. That's known as a stale green light. Eventually going to have a red light come up. But the fact that we're going up on lower volume, the volume is the gas pedal, right? So if you're going uphill and you're starting to let up on the gas of your car, what's going to happen? You're going to start to slow down pretty quickly and even reverse and go downhill again. But look down below. The CCI, which is my most favorite oscillating index, is actually pivoting lower after an up day today. You don't see that often. That is a negative divergence, but more concentrated in the most recent days that we've had here. You see, so that's a negative divergence, and therefore keeping that downside target as well on QQQ down there as I get that data box to pop up right there, 464.86. Now remember what I said about that monthly chart. Look at that. That is almost vertical. It's unsustainable growth. We had an up leg like what we had here in the COVID crash. That was a steep angle. And this is as steep, but it's going on for much longer. And again, down below on the monthly chart, you see that massive negative divergence after much higher price highs here. Now again, when you look at that and compare that to what we saw in past markets or past crashes, you could see here back in 2008, we had higher highs coming in right here. But look, right before the crash, what happened? We had negative divergence show up right there on a bearish harami, which is a bearish candle. It did a little bit of an ABCD pattern, and then it was followed by a bearish engulfing, followed by another bearish engulfing. You see how those bearish engulfing candles work. Here's another bearish engulfing. Here's another bearish engulfing. Here's a bearish engulfing right here. So if you're looking back at the past, every single one of those bearish engulfing candles that showed up at the top resulted in down markets that followed. And again, this is the monthly chart. You can see here that while we're almost halfway through this month, we have a bearish harami followed by a hanging man, followed by a hanging man, followed by a hanging man. I repeat this over and over again because hanging man candles are as bearish as bearish haramis and bearish engulfing. Look at that bearish hanging man right there. Bearish hanging man is a small body candle that has a longer shadow underneath it. And if you look down at the monthly volume, we're not even a third of the way of the volume that we had last month and almost halfway through the month on the calendar. So the chances are we're not going to have a blowout in the volume, and there's still a lot of October left prior to an election. So anything could happen here, folks. I'm just telling you, we're making money on the way up, by the way, and I'll show you some of the trades that we're doing. We're making really good money, especially in the Bitcoin related stocks. And I'll show you how you can get involved with us for free for a couple of weeks so you could even sample this on your own. I'll put the link to that in the description box below so you can join us and listen to some of the webinars and such. So again, going back to the daily chart, we get that stale green light. Oscillators are hinging on the stochastic, pivoting on the CCI, volume dropping. And so that downside target, again, like I said, is 464.86. Moving on to SPY, and I'll be showing a very long-term chart of the SPX at the very end, so I could show you the cycle that we're looking at here. So stand by to the very end so you can learn more about how the cycle is working in this market. Here we are again. Look down below. We've got green, 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 slight drop, very slight drop in the volume, but we have a much wider divergence from that moving average. Downside target in SPY still in place, 555.58. Now finally, before we get to Bitcoin and some of the other stocks that are Bitcoin related that we trade, let's take a look at the VIX. Now, we have this pattern right now that is approaching that 20-period moving average. Understand that that moving average is going to act as a support level. Now that the VIX has moved over that 20-period moving average, the role has reversed with regard to it once being resistance is now going to be support. Now, for the most part, the VIX is inversely related to the S&P, and I say for the most part because it's not always, but for the most part it is. And if you look at the lows on the VIX, on the weekly chart, we have what's known as a rounding bottom. A rounding bottom is very, very interesting because what it is it's a bullish signal. It's more or less a consolidation of price action where more and more buyers start to come in at a slower pace. And then once that builds up, it then pops. So I believe that we're going to see a tremendous rally in the VIX, and it could be even explosive if I could be so bold and use that adjective to describe it. We've had a price target on the VIX up there of 41.88 for a long time, and then it was in this 1 week where we hit that and came right back down. In fact, I think we're going to blow out of this high. It got all the way up to 65. I think we're going to go higher than that. And again, no one's going to make these calls, and I know there's always someone that's going to have a chip on their shoulder and try to pin that as, oh, you're crazy or you're dreaming. But this is what I do for 4 decades. And listen, if I have an 82% hit rate in my accuracy with individual stocks, I'm going to have the same results with the longer time frames. The only thing is I'm going week to week for the swing traders. If I was going to put a 65 or 70 price target on the VIX, it's not going to happen overnight. And like I said a few weeks ago, if you were in your car driving down the road, you're not looking in front of your bumper to drive the car. You're looking out in the horizon. So when I take a step back and look at these weekly charts and monthly charts, that's me looking at the horizon and being able to see what's coming down the road over the long term. And then I lean my shorter term intermediate trades, the swing trades, in line with the longer term view. You follow? So I could still take long positions, but in the back of my mind, I'm thinking, whoa, this VIX could pop, which would be bearish for the general market. So I have to be very quick to take my loss if the trade goes against me. So I'm very much on guard. And that's really the best thing that I can offer you with a long-term view that is so bearish, to stay on guard. Stay on guard. You know, I use the 7-point trading checklist to do these forecasts where I look at the signals and I basically check them off in my mind. Like I said before, if I see a bearish engulfing candle, I'm going to put it on the bearish side. If I see a drop in volume on the way up, like we've seen, I'm going to put that on the bearish side. If I see a wide divergence from the 20-period moving average, if I see gaps below the market, stochastic negative divergence, CCI pivoting lower, role reversals, if I see all that on the bearish side and there are no buy signals, why in the world would I want to take a long position with those signals telling me not to? It's like driving a car and driving through all the red lights. Why would you ever do that? Unless you're some kind of a thrill seeker, you're not going to go run the red lights, right? We have to trade according to the signals. Now, going to Bitcoin, I want to show you something. My hit rate is still intact at 100%. This morning, I put out a new upside target on BTC, and I posted it to my X page and I pinned it right there at the top. Shortly thereafter, I put out a trade publication to our members in a completely different stock. I can't give that out, obviously, because they're paying members. I'll give you some of what we're looking at, but I'll give you more or less the summary page to see how we're doing it. But the bottom line is, if you're following me on X, this is one of the most valuable free bits of information that I put out to the public, because 100% is 100%. Now, eventually, I'm going to miss on one or two. So that percentage of accuracy is going to drop to 99 or 98 or maybe 95%. But if you get 100% now, or even in the mid to high 90s, and you're trading Bitcoin-related stocks and crushing it like our members are, see, here's the summary page. On September 30th, when Bitcoin was showing a pivot lower, we got into the November 155 puts. We bought those for 9.5, and many of our members sold them at 13.5. So they made over 42% in a very short period of time. And then once it got to the low and started bouncing off of support recently, here you can see on the 3rd of this month, we reversed the position and went from buying puts here to reversing the position buying calls. We bought the 190 calls in November for 9.5, and today they're trading 13.5. So there you go. You got 40% on the way down. You got 40% back on your money on the way up, and our members are very happy. Many of our members have already paid for their annual membership on these two trades alone. And so while that's not a guarantee, of course, our members are learning how to read the chart, so they're not dependent on me to tell them what to do. You follow? Now, let me talk a little bit about cycles, because this is why my long-term view is still extremely bearish. And I'm not going to change that. Doesn't matter how many people try to change my mind. I'm going with the charts. Notice down below here, I have these bars. See, it says 101 bars. That's the cycle. I have the chart set at a monthly interval, so 101 bars represent 101 months between the cycle lows. Hopefully you got that. If you translate that into years, that's roughly 8.5 years of the entire cycle. And we've been hitting lows on each one of those cycles. Very, very important that you understand what I'm talking about here. If not, hit the rewind button and grab a chart and some note paper and figure that one out. Now, these are the cycle lows here, but in between each cycle low, we run into what? Almost midstream on every one of them, we have cycle highs. When you're measuring a cycle, and if you're a chart or market technician, you know this is true. When you're measuring cycles, you go from low to low. You got Stan Ehrlich, who developed the cycle finder. That's in his little book of magic tricks on how to use the cycle finder and how to find the exact cycle. Every stock has a cycle. Not every cycle is exactly the same. Some are longer than others, some are shorter than others. But our market, the SPX in particular, is on a cycle, and we're on a cycle high, and I believe we're going to hit the cycle low over a 3 to 5 year period, which means, and I'm doing this on a recorded session here for the record, I believe the next bear market is going to last probably 5 years, because my target low is the March 2020 low. So I think we could go on a little bit more here, and then maybe we'll see a bounce. And for some of you, that's shocking. Others, you might see that to be true based on what you're seeing on your own charts, but that is significant. Now, the other thing that I want to talk about is what I said last week with regard to FEMA, because we had some comments in here, people saying, what's your source? This is misinformation. That's one of the buzzwords lately, right? Misinformation. Everyone's throwing misinformation around because they don't want to call people liars. They just say, oh, well, if you don't agree with my opinion, it's misinformation. Well, I said that Mayorkas warned that FEMA doesn't have enough funding to last through hurricane season. Now, you might hear it in my voice. We haven't gotten much sleep here over this past week. We got hit with Hurricane Debbie. A week and a half after that, we got hit with Hurricane Helene. It was devastating. It wiped out our town. This week, we got hit with Hurricane Milton. My son down in Cape Coral got hit, and a tornado landed 2.5 blocks away. And so we know firsthand that FEMA is not here. We don't see them. Governor DeSantis is doing a great job. He's called in the linemen. They were 50,000 strong, lining up at the border, ready to go. They launched them, and people are still without power, but they are an army of heroes coming in to help us. FEMA is nowhere to be found. Red Cross is nowhere to be found. Our town is leveled. There isn't a truck around. I've done an X post to show you exactly, boots on the ground, what I'm talking about. So if someone challenges me, what's your source? I'm the source. I'm right there on the ground with you. But to back it up, for the record, I put some links in the comments field last week just to make sure everyone is seeing where my sources are. And my sources basically are the White House and from Department of Homeland Security. So let me just play this video because you could see the White House has basically contradicted themselves right here.
Categorically false. It is not true. It is a false statement. No, Biden did not take FEMA relief money to use on migrants. Funding is also available through FEMA's Emergency Food and Shelter Program to eligible local governments and non-for-profit organizations upon request to support humanitarian relief for migrants.
All right, so what does all that mean? Well, it means that Americans are going to have to pick up the bill. Individual states are going to have to pick up the bill. Insurance companies, if they even find a way to pay it out, are going to pay it out. And then they're going to raise their rates, and we are all going to pay the bill. What is that going to do to our economy? It puts a big, big dent in buying power across the board nationally. So while we're not seeing the immediate effects of this very tragic hurricane season, we absolutely will. It's a delayed reaction, just like anything else, just like what we'd see if the dock workers are still on strike. It doesn't happen immediately, but down the road, we get supply chain issues. We're still having supply chain issues right now in the state of Florida. It definitely affects the economy. So if my comments tend to trigger you, I don't know what to say there. I'm just telling it like it is. I'm giving you the straight truth, and a lot of the media channels are most definitely not going to do that. Now, going back to politics, because it's very important for our markets, you have to understand that right now, the Treasury Department, the Fed are leaning left. That's an absolute fact. And Janet Yellen doesn't hide it one bit. This wasn't too long ago where Janet Yellen admits a serious U.S. dollar collapse is possible. And she and Donald Trump have had their differences of opinion while she was the Fed chair, and now she's the Treasury Secretary. Between her and Jerome Powell, they're definitely not Trump fans. And so what you're seeing right now is what I believe to be painting the tape. That's an old term used to move the market. It's a manipulation to move the market to attract buyers or sellers into a particular stock or an individual index or a sector. It is absolutely happening. We're seeing the manipulation in the numbers. We're seeing the revisions in the job reports. It's not a secret at all. So Janet Yellen is what we called in the Navy a short timer. She doesn't have much time left in that position. I believe she'll be replaced. And the same to be said for Fed Chair Jerome Powell. Trump has already said that if he's elected, he's not going to reappoint Powell to the position. Now you might say, well, what if Harris wins? Well, the bottom line is Kamala Harris does not have a plan. She talks a great game on 60 Minutes and some of the talk shows, but she's never defined a plan at all that Americans can understand with confidence. So while the odds are extremely low that she will get into office, I would not be surprised. I know it's going to sound crazy, but I would not be surprised to see something dramatic happen between now and Election Day. And I'm not going to talk too much about that right now, but next week I may. I just don't want to risk getting shut down on YouTube, right? They have different algorithms that look for certain words. But I do believe, and I've said it before, that the markets will ultimately be jolted and the sell-off and the crash or the events at hand will be shocking. It wasn't long ago where I mentioned to our viewers that Biden would not make it to Election Day. I didn't mean that he wouldn't live till then. I said he wouldn't make it. And what do you have? We have Biden pulling out of the race. Again, there are crazy things happening between weather and politics and global events and wars. I do believe that there's a black swan flying around. I just don't know which black swan is going to come in. So be on guard, protect your money, use options if you have to protect, and make sure you're paying very close attention to the charts because the numbers are giving us other stories that support what I'm talking about on the charts. Unemployment numbers came in dramatically higher. We're not talking just a little bit higher. They came in dramatically higher from the forecast and even higher than the previous report on unemployment. Recession and unemployment go hand in hand and they reinforce one another. So if unemployment continues to rise, then we are in a recession and they're refusing to report on that. We'll have to see what happens next week with the GDP. But even with the GDP, that can be manipulated. There are going to be revisions between the jobs, the unemployment, and CPI and the inflationary measures that the Fed uses to gauge and make their decisions from. So that is what we're talking about there. Be on guard. I cannot overemphasize that to anyone. Come on over to Sticky Trades, try your free trial membership, and let's get going because you can plug into the webinars. It costs absolutely nothing. You could ask any one of our members that have come on already for free if we hound anybody for a credit card. We do not do that. We don't ask you for a credit card. I've said that so many times. We don't do it. We're excited about what we're doing. We're teaching people. It's what I love to do, and I want to teach you too. A quick shout out to Vic Chopra. I feel a little embarrassed because that little blue bubble showed up with $1.99, and you can see my question to him right below that entry there. I didn't know what that bubble was. We've never had anyone donate money at all, and that's the very first time. So thank you, Vic Chopra. I really appreciate that. Thank all of you who have contributed to the charitable organizations that we are aware of in taking your trading profits. I'm going to mention some names next week, but we have several people who have taken profits from some of these trades that we've been doing and donating it to charities of their choice. And thank you, thank you, thank you. It's been a crazy couple of weeks, but folks, you are the fuel that keeps me going. I absolutely love being in touch with you. I love doing the videos, love putting out the trade publications. Stay in touch. Keep liking, sharing, subscribing, and especially commenting on these pages. It helps us help more people. So thank you and have a good weekend. So long.